Hey, it's Jack from Alpha Charts with a state of the market video. Today is February 18th, 2023. Before we get started, this video is for informational purposes only. These are not recommendations to buy, sell, or hold any stock or security. And I may hold positions in some of the equities mentioned. Know your time frame and risk tolerance. Okay. And if you don't follow me on Twitter yet, at AlphaCharts365, obviously you're probably watching this on YouTube. And please like and subscribe to my channel. Like the video, leave me a comment. They tell me it helps with the algorithms. It helps me, just helps out with everything across the board. And so I do appreciate you guys for subscribing to the channel. Thank you, thank you, thank you. Last announcement, if you haven't been involved with this yet, IPO by Trader Lion, IPO Masterclass, using the people from the Life Cycle Trade. Again, these are the authorities on IPOs. I'm part of this particular class, and the second installment has been, it's been absolutely amazing. Really just the amount of in-depth knowledge that we're getting is fantastic. So if you're interested, I'll put a link down below for you guys. You guys could check that out. And again, and everything's recorded. So even though you may have missed the first one or two, it's not too late. You can, for life, you go back and you can go ahead and review all the classes. I was part of the Oliver Kell one a few years ago, and I've gone back and I've watched that particular class over and over again as well. This is another one I plan on being, not only learning now, but 3 months from now, I could go back and rewatch one episode or a specific episode that I want, that I think would be that I need the most help with at that time. So IPO Masterclass by the Trader Lion Group. Using the Life Cycle Trade people that wrote the book are literally doing the event. So that tells you how good this is. Anyway, link down below if you're interested. Let's get to the charts. Okay, here we go. So S&P 500. So on the week, let's start with the week first. On the week, it was down 0.28, right? 0.28%. But it felt much worse, if that makes sense. Okay, and again, it's feeling, right? But you see, we sort of ramp up the selling volume the last 2 days of the week. You see that's, this day right there, lower volume, higher volume. So distribution. You're starting to see a cluster look of distribution, which makes me a little nervous. What else are we seeing? Well, we're seeing higher highs and higher lows from this point, but we haven't taken out this high yet. And maybe we will, right? But right now we haven't. And so that is giving me pause. So that's one side of the equation, right? That's maybe something is changing in this market under the surface that is slow to show up on the indexes, but we're starting to see some issues in the volume. We're starting to see the issues by not taking out this high right here, and so on and so forth, right? So right now this is a lower high compared to this. That's something to consider, okay? The positive side is we are working through all this data. The 200-day is now basically flat, right? The 50-day is crossed, and price is still above the 23-day EMA. That's the positive data. So we talked about the 3 to 5% pullback from the highs, and high to low, it's at 3.62%. Technically, if we try to get this fairly close to the 50-day, that's a 5% pullback, which would still be normal price action within the context of a bull market, right? If basically we come down the rest of February, right, or next week, which basically is almost towards the end of February, tag the 50-day, it holds, we make another higher low here, that builds the energy we need to break out, and then take out this one, bull market's on, let's go, right? But if we start breaking the 50-day, break the 200-day, anything underneath the 200-day is garbage at this point, right? We got to be very, very defensive and potentially even short at that point. So mixed signals. I guess that's the only point on the S&P chart is mixed signals. That it was only down 0.28 on the week. but this is mixed signals, and there may be some more downside to go. I wouldn't be shocked if we get this 4,000, 39.75 to 4,000 area, somewhere in here, and next week at some point. That would not shock me. That'd be within the context of the 3 to 5%, and the bull narrative would still be alive. We break 39.40 ish. That's a different story. So again, next week we'll be taking out this data, and then we'll be into here, right? And this will be a fully flattened 200-day. And again, price stays above it. The other option too is we could just go and do what we've been doing here. Chopping, right? Chopping. Not much going on there, right? And we could just chop another 6 months. What do I know? But as of right now, those are the scenarios I'm looking for. I need that 50-day to really hold. Obviously the absolute line stand is the 200, but I need this 50-day to hold for that normal 3 to 5% pullback and let this move out, right? The other thing I want to see for the bull side is I want to see this, 4,300 area, right? I want to see that 4,300 to 4,325. I want to see that be taken out on the S&P. That would give me a little bit more conviction in the bull narrative. Not a little bit more, a lot more conviction in the bull narrative. So we'll see what happens. It's a beautiful pattern. You have the inverse head and shoulders. Everything is doing what it's supposed to do. And this pullback is probably what it's supposed to do if this is a bull market, right? Because that creates the energy for the breakout. It also shakes out, the weak hands. I sold a lot this week. I know I did because, if you're in growth stocks, you are, the 3 to 5% is more like 5 to 10%, right? So, it hurts way more in high beta growthier type names, and I tend to trade those. So again, things stopped out this week. It just what happened. But I have no problem getting back in if that's the case. We'll go over some of the best things that are holding up so far tomorrow in our stocks to watch video. So check that out. I may do it later tonight because unfortunately I have a funeral to go to tomorrow. So I may end up doing that stocks to watch video tonight. We'll see how my day runs. All right. So S&P right there. So it was down 0.28 RSP. Okay, I think it's going to be a good. Look at that. RSP was up 0.05. So you can see that, with the RSP on the week up 0.05 did slightly better. We like to see that. That's nice. And it came up and it did make a higher high. And we talked about this being a false, not the place to buy, right? You want to wait for the pullback. It also is holding the 23-day. It has a flat 200-day way above it, right? This needs to get moved. I forgot the date. Was it May 2nd? May 3rd. Right. This gets moved one more over. And as we take out the rest of this data next week, right, this 200-day has the potential to start to curve up on the RSP. And so, again, it's very, very positive. Can we come back and potentially tag the 50-day on the RSP? Absolutely, right? That's definitely a possibility. And I do like that this was did make a higher high, right? So I do like that so far. Again, if we just retest and make a higher low compared to this low right here, or even this low right here, you can see the 50-day was very important here. So it's going to be very important here too. And my guess would be that is another 2.5%. And from top to bottom, RSP is pulled back, top to bottom, 3.8%, right? So that would be in that 3 to 5% range, just like we talked about. So choppy markets next week is right off the bat what I'm thinking. Let's look at Qs. Qs on the week was up 0.5%. Look at that. Qs up 0.5%. On the daily, so we're seeing this decline in volume, right? As it's coming back in. I do like that we got the cross there. We haven't quite got a golden cross yet on the 5,200 on the Qs, but I do like the 23 is above it. And so, I always said 290 to 300 on the Qs is the spot. And it's been the spot literally for years, right? For years, it's been the spot, and it's still an important spot. So I think 290, which is where the 200-day is, which is starting to flatten. is really, really important. And let's pop this forward a few degree. There you go. Again, next week we take out this data right here. A little more distribution look to it the last 2 days, Thursday, Friday. So just be aware of that. Also decline in volume. That's kind of interesting too. People are getting maybe a little scared. So again, we may get a little bit more of a shakeout next week. Very, very possible. Equal weights are up 1%. Again, that's a positive, right? I mean, up 1% on the week. It felt pretty rough the week, but in the end, it really wasn't that bad. There we go. Third, again, taking out this data, flattening or flat 200-day. And again, as we get this data out of the way next week, this is going to start to curve up. And on the equal weighted Qs, it already turned higher. So every time I want to get a little bit bearish through my macro analysis and inverted yield curves and who knows what else, right? Now who knows what else? There's a lot more high credit card debt, tightening monetary conditions, so on and so forth, higher interest rates. There's a lot going out there in the macro scene. Every time I want to get bearish based on that, and there's a lot of data that would want to get you bearish, I see something like this. It doesn't look that bad, right? This is a healing market. Now, it may take more time, but you can't get too bearish in a market that's looking like this on the equal weighted Qs. All right, here's IWM, and this is a Russell small cap, flat 200-day, starting to try to turn up, it looks like. Let's move this to the third, like we've been doing. There we go. Again, getting rid of this data will help this start to turn up, and that's really cool. So again, small caps looking good, and you're not seeing the same type of distribution on the small caps, which is kind of nice. It's naturally equal weighted, which I like as well. On the week, it was up 1.5%. Again, hard to be bearish. I mean, it felt worse than what it was, I think, in the markets this week. Again, and I think growth got hit hard. And we'll go into the interest rates and the dollar and see what that all looks like a little bit later. IWO, let's look at that. Again, looks like a flag. Everything looks okay in IWO world. This is small cap growth. Came back. Didn't quite make that higher high there. Did IWM? No. So you do have that lower high on this index as well. So that's something to definitely to keep an eye on. That we haven't taken out this most recent high. So just be aware of that, okay? That could be a problem. What else do we have? Again, that looks pretty good. Let's do mid caps next. Sorry, I was distracted there for a second. MDY is what we're looking for. Again, is this a stage 2? It may be, but again, we got to take out this higher high right there. It's got to take this out. This was a false breakout, obviously, but it's got to take it out. A little more distribution showing up here, right? Look at the fall off in volume, and now we have this type of distributive looking on the volume. It's not terrible. It didn't even tag the 23-day, to be honest. It's not terrible. The week was probably pretty good, actually. 1% up for the week on the mid caps, right? My favorite index right now. You guys know that. I've been talking about it. 200 days already rising. And what's not to like, right? This is the energy, right? As long as it stays above the 23-day EMA, this is the energy that we're talking about. That needs to build. So I do like that a lot. As long as it stays above the 23-day, and there's your 50-day right there. But definitely the strongest of the bunch. So on the indexes, it felt way worse than what it was. And I think also depending on what stocks you're in. I was in 2 stocks last week that got freaking annihilated, right? I was in CRDO. Happens. And then I half a position, luckily, knock on wood, it was only half a position. And I was in Toast on a half a position. Now, I knew the Toast earnings were coming. I loved the chart. So I kept my half position because I had some gains in it into earnings. Well, it didn't do very well in the earnings, and my gains got evaporated, and I took a little loss in the name. So I hit both of those last week in the same week, 2 days apart, which again makes me a little bit, made me a little more bearish coming into my analysis this morning. But looking at the charts so far on the index level, nothing is screaming problems yet. A couple little question marks, but nothing screaming problems yet. Let's go ahead and look at the sectors. How do the sectors do? XLF first. So here's XLF. Broke out, did make, again, higher highs and higher lows, right? So XLF is doing what it needs to do. Again, may come back and retest. As long as this 50-day holds, I think everything is absolutely fine. 200-day is turning back up. So again, doing everything it has to do. It was down marginally, 0.27 on the week, but overall looks really, really good. XLF is it's participating, and that's all we ask for from XLF. Just participate, right? I don't want to see any divergences, and we don't. Semiconductors. Now, I was in a few semiconductor names, and again, some of them got hit a little bit. I'm using XSD, equal weighted semiconductor index. Again, higher highs and higher lows. 23 held. So all in all, that's looking fine, right? On the week, I think it was down on the week. Yeah, about 1% down on the week, but hasn't done anything terrible yet. Could this come back and test a 50-day? Absolutely. Or the breakout, it's 4%. That's, 7% roughly. Could it come all the way down? Sure. But that would be still within the context of this higher highs, higher low potential stage 2 breakout right here in semiconductors. A break of the 50-day gets me way more cautious, and obviously the 200-day as well. But as of now, this is what we call bending, but not breaking, right? I think the next major level, this 192, 193 area, call it 190-ish, right? And then the 50-day below that. So want to see semis, kind of shore up a little bit here, no lower than I would love to see 192. We'll see, but that's okay. XTN transports, equal weighted transports, did make a higher high compared to here, and then got rejected. Again, we talked about not buying up here in general, because this is after you go from 75 to 83, that's a big move in 3 days. So we expected the pullback. 23-day held right where it had to. On the week, things were up 1.42%. So transports were up a little bit on the week. Again, that's a huge positive, right? Huge positive. So right now, this 23 days got a hold. Again, could it crap out on us? Absolutely. But overall, it's just not yet. It's bending, but not breaking. And the last one is going to be home builders, XHB, who have been ripping. Again, not the place to buy, like we talked about. And now making this flag, 23-day held. Good amount of distribution though. I'm not sure what that's about. But again, higher high compared to here. We're the relative higher high is very important. Higher highs and higher lows as it's trying to break out. The 200-day is turning up. The narrative is home builders should be falling, but they're not, right? And so that's information. Now, we have this area, this 67, 68 area, which is important, right? We're not far from that. And then 65-ish, right? That's got to hold. 65, 65 and a quarter, 65.50, something like that. It's got to hold in home builders. So again, bending, but is not breaking, at least not yet. We'll see. But those are the levels I'm watching on the sector level to show some more weakness. And they were down probably. No, they were up 0.36 home builders. So bending, not breaking on the ETF level. Okay. Got it. Let's look at the internals. What are the internals telling us? Shut all that off. Go here and let's look at the VIX. VIX has been in the 20 range and it's still in the 20 range. VIX is low. VIX is low. It's expecting next 30 days for lower volatility. That's what the VIX is telling us. Can it go lower? Sure. Can it spike up? Sure. But right now, it's low. Credit spreads. We saw a little spike earlier in the week. And again, it is making higher highs and higher lows on this shorter term time frame right there. but definitely still a lower high from here and lower high, obviously, from here. So bending, not breaking. I think that goes well with this as well. Sentiment. Let's see how bearish things or bullish things got. Again, a little spike in bearishness, but nothing crazy, right? Nothing crazy. So how do we read that? That's actually good for a melt up market, to be honest with you. I love to see that for a melting up market. And then let's look at the breadth. MMFI percent of stocks above the 50-day. And again, it's at 70-ish%. You wouldn't be shocked if this gets down to, the 50 mark. If we get a little more pullback next week or some more volatility, I wouldn't be shocked if this gets into this area down here. We talked about it weeks ago on how it got overheated and a pullback was likely, right? And it did. And we've seen that multiple times in the past when, but it could also stay up there for multiple weeks at a time in really good markets. I don't know if we got a really good market right now, but yeah, it got overheated, pullback, but it's holding up just fine. Then, here's my toast. Oh, so bad. Let's look at Bitcoin, US dollar. I like the Coinbase one. And, Bitcoin, the riskiest of risk assets, is starting to move higher. No idea if this is, going to continue or not, but it looks pretty good actually, right? And you see day, week, month, quarter, year, all green. So Bitcoin being risk asset, pretty good. Here's the VWAP from, I think that's from, is it the beginning of Bitcoin? Where is it from? No, it's from this day right there, March 20th, right, from the COVID lows. So that's the VWAP from the COVID lows. I'm also reading Brian Shannon's book, his brand new book on VWAP. So I'm hoping to incorporate more VWAP into my analysis going forward as well. There we go. So let's wrap this up. SPX, markets in general. They have the bend, but has not broken yet. Look to it. There's a case to be made for both, but I still think the bulls have the ball. I still think it's better to lean bullish going into this week in general, but not a buy the dip type of market. If we can, if you can get a good entry, again, that's where it all matters. Entry, like if we get some early week weakness, and this can flush maybe close to that, 39.80-ish area, that would potentially, close to the 50-day. Maybe we can, maybe things are starting to set up under the surface on names that you like. Again, we don't trade early index. At least I don't trade indexes. Some people do, and do very well with it. But just get really good entries. It's okay to be in cash a little bit. We got the flattening 200-day, and this data will be taken out this week, right? 1, 2, 3, 4, 5 will be down here by the end of the week. That's a big deal. Again, and every week I'm going to go through this and show you what's being taken out, because in 3 or 4 weeks in March, when this data gets taken out, right? Like depending on where price is, we could be in a rip roaring stage 2 uptrend at that point, right? Or price could be below the 200-day and it could be turning back down again, right? Like how fast could that happen too if we never take out this high and then we take out the 200-day? That'd be terrible. So don't be in a rush to put positions on. There's plenty of time. The year is early, the month, what I'm saying? Like there's no rush. Like there's no finish line in this game, right? There's no finish line. So get the good entry. It's okay. Have some cash. I think having cash right now makes sense, right? I have a high level of cash by the end of the week. Obviously, I own CRDO and TOST, I better have a high level of cash at this point, because there's no reason to own those names unless you're short them. So have a high level of cash. Be judicious in the positions you put on. Catch me tomorrow for the stocks to watch video. The best names possible out there that I could find. I will share with you what is holding up well. What am I stalking? Check that out. IPO Masterclass if you're interested. Brian Shannon book if you're interested. It's on Amazon. And hope you all have a great day.